What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So generally speaking, this has been another very positive week in markets. This comes in response, of course, to a very positive job report delivered on Friday. Fun fact, you'd have to go back to 1969 to see unemployment at this level in the US. And of course, Fed Chairman Jay Powell not only delivered the expected 25 percentage point rate hike increase, but he stated that disinflation was welcomed. Essentially, this means that inflation is moving in the right direction. This further supports that we may indeed beat inflation without the need to push unemployment higher or drive the US economy into a recession. Stocks and crypto rallied on the news. However, while Virgin Galactic and Tesla, for example, both gained over 6% for the week, Neo is down 11.96%. Now that's rough. So it's been about a month since I last covered Neo. So in today's video, I'll go over some of the most recent news around the stock, likely behind this move lower, then take a quick look at the technicals and price predictions to see if we can get a sense of where we're heading next. And finally close with how I'm approaching the stock personally. As always, this isn't to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video an early like if you haven't already and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. There are two pieces of news that were delivered this week and are more than likely the cause behind Neo's move lower. The first one, of course, is the January delivery numbers. Neo delivered 8,506 vehicles in January. That's down 46.22% from the 15,815 number posted in December of 2022, and down 11.87% from the 9,652 number posted in January a year ago. So that's underperformance on a month-over-month basis and a year-over-year basis. Now, to be fair, China did shut down for the full week at the end of January in celebration of the Chinese New Year. That impacted not just Neo, but other Chinese EV makers as well. The other item to note is the price cut that Tesla did in January. That, of course, was positive for Tesla sales, but it added additional pressure on the rest of its competitors. Now, you can see that the stock dropped initially on this news. We attempted a recovery here on the chart, only to have the second piece of news here that I'm about to share drive us lower. The news I'm referring to, of course, is the controversial announcement that Neo started offering the equivalent of what is a nearly $15,000 discount on its ES8 and ES6 model. Now, this caused a decent amount of backlash in the existing owner community. Investors raised concerns as this would absolutely be impactful to the profit margins, and news outlets, of course, blasted the story, supposedly quoting Neo salespeople stating that they had never seen such a big discount before. Now, like many of these type of stories, it comes down to misinterpretation of what was leaked through unofficial channels, right? So the formal announcement and clarification didn't occur until late Friday post-market close, and by then, the stock was already down over 11%. So I'll link the full articles down below in the description if you want to go and read the full details. Now, the short version of the story is this. The ES8, ES6, and EC6 models are about to receive a facelift. That said, Neo still has some show cars and stock cars available, and therefore, the company is offering some additional discounts to clear up that inventory. Nothing in common here. And in fact, very different than the overblown narrative of price cuts across the entire Neo lineup. So there you have it. That's what's behind the move lower. Now earlier, I called out the fact that Neo is down over 11% for the week, but perspective is everything. If we look at the year-to-date performance on Neo, you can see that despite this pullback, they're still up nearly 15% for the year. So if we look at the technical chart, you can see that the price action around Neo has been fairly stagnant and closely tracking the 50-day moving average line. The green line represents the price action at the close of each trading day, and the red line is the 50-day moving average. That, by the way, currently stands at $11.65. Buy and sell volumes have been pretty steady, and RSI has been pretty steady as well. All of this simply means that we are currently in an accumulation phase for the stock. We now know that during Q4 of 2022, investment giant Baillie Gifford increased their Neo position by 25% or 24,277,897 shares. That's a $250 million purchase and they are obviously taking advantage of these lower prices. Looking at analyst sentiment and price predictions, NEO over the last 3 months has received 14 ratings with a consensus for a moderate buy. The breakdown is 10 buy ratings, 4 hold, and this is important, 0 sell ratings, which is bullish. The average price target stands at $16.81, suggesting a 50% gain from the current level. Current expectations are for NEO to reach as high as $28 on the high end of the range, and the low forecast comes in at $10.40. A simple way to think about this is that with China's zero-COVID policy being lifted and both the US and Chinese regulatory agencies reaching a framework agreement, analysts see minimal downside risk to NEO, hence why Bailey Gifford and others are currently accumulating and loading up on shares. I've said this before, but it's worth stating again. NEO has not been this cheap in 2 years from a valuation perspective. Short interest, meaning those betting against the stock and hoping to capitalize on the price going lower, so again, short interest, that has dropped by nearly 14% in January from a month prior. NEO continues to make the right moves with its business. More new models beyond those presented at NEO Day have now been announced. To close out January, NEO revealed more details on their mid-tier mass market focused sub-brand. We now know that its code name is ALPS or ALPS. They are targeting an official launch date of early 2024. The other sub-brand that they announced last summer will target the lower end of the mass market, and its code name is Firefly, and that is expected to launch in the last quarter of 2024. Now, more near term, the ET5 hatchback is launching this summer in Europe. If you know anything about Europe, you know that hatchbacks are super popular, and so this makes it the perfect product offering to capture more market shares in Europe. In case you forgot, NEO currently operates in the 2 biggest markets in the world, obviously China, and in second place, Europe. We already know that they will enter the US market sometime in 2025, and the strategy that they're building up on right now means that the launch timing in the US market should coincide with their ability to offer an EV at every price point of the market. My point is, every dark cloud hanging over NEO has been lifted. Execution from here on out should be what drives us higher. This then now brings us to what I'm personally doing in light of all this. My targeted share count on NEO was 1,000 shares. I'm of the opinion that NEO will continue to execute and deliver value back to shareholders. I've now secured my Virgin Galactic position, and therefore I've resumed buying more shares of NEO. I've added 100 shares in the last week of January. My current average cost is still higher than what I would like it to be at $16.06. The plan will be to continue to accumulate more shares above and beyond the target goal that I have while we continue to hug the 50-day moving average. The reason for this is that every extra shares purchased at this lower entry point will allow me to layer book some profit without impacting my core holdings. The last thing I will say is this: if I'm right, the various US economic data points seem to suggest, right, that not only can the US economy withstand the tighter monetary policies, but it can do so long enough for inflation to return to or near the Fed target range of 2 to 3%. Now, my base case at this point, assuming inflation continues to drop, that's what we're counting on here, is that we will see the stock market and crypto trade within a higher trading range moving forward. This isn't the year that I believe that the stock market and crypto, generally speaking, makes brand new all-time highs, but I do believe that we're back on the uptrend. And with that mindset, not being invested in capitalizing on these lower prices right now is likely to feel like a big mistake later on this year. But on that note, that is it for me today. If you found value in my content, click the like button and share with others who you think could also benefit from it. For my newcomers, subscribe, it's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.